The stock market crash of our lifetimes. That's what we're all waiting on, day after day, week after week, month after month now at this point in time. Where is this big one, the big crash, okay? So obviously last year, massive amount of people got convinced that we had an epic crash coming and they sold out of the greatest companies in the world in a massive, massive way, right? And I thought, let's go ahead and address this head on today. Let's talk about, in order to get this massive epic stock market crash, what do we need, okay? There's two core things we need to happen in order to get this crash. And without these two things, you will not be able to have a crash. It's literally impossible. So we need these two things to play out. I want to share those two things because I think that's very important. Everybody understands that. And we got to just talk on a little bit higher level about a stock market crash, something like this happening, because I know a lot of people just like to get emotional about this and just say, oh, it's going to crash and this is, and it's like, just think about this a little practically, okay? Let me run you through the scenarios on how you can actually get to that place. And what are the chances you can actually even have a stock market crash? And also, what are the chances that right now is actually a tremendous buying opportunity for folks out there, and they're missing it, thinking like, convincing themselves like there's a big crash coming, and maybe there's not, okay? So let's talk about this across the board here. I appreciate everybody joining me as always. Thanks for being subscribed, folks. We're going to talk on a little higher level here today. I'll break this down as simple as possible, but it's very, very important. So I appreciate everybody joining me, okay? So this is just year to date for these stocks, okay? NVIDIA's up over 100% year to date, right? All these stocks are up obviously massively from where they bottomed in the fourth quarter of 2022 when everybody couldn't sell these stocks fast enough, right? Meta's up 92%, Tesla's up 55%, AMD, remember, we're not even halfway through the year. AMD's up 50%, Apple's up 37%, Microsoft's up 29%, Amazon's up 28%, Snowflake's up 27%. You can't blame this on stimulus and all just, the market's just going up because, everybody's got too much money. No, not especially not according to the bears and the naysayers on the market, right? No one has any money according to them. So how's this market going up? This is one of life's great questions, right? People were so convinced that these stocks were going to crash so bad that they were selling the greatest companies in the world at the silliest prices we've seen in modern times, let's call it that, since the great financial crisis. Somebody was selling NVIDIA stock at $108, convinced that it was going to $90, $80, $70. In order to sell that stock at that price, you have to be convinced it's going there, right? Obviously, it didn't go there. Meta was the most mispriced big, large cap stock I've ever seen in my life, okay? People were selling this stock at $88. Wait to see some of the prices people sold me Meta stock at. Wall Streeters sold me Meta stock at 70, 60, 50. That's what they were convinced Meta stock was going to, right? And this stock is still stealing money. It's still stealing money even after this big climb. It's trading at a forward P of 20, which, by the way, analysts are off on their numbers. In my opinion, it's actually trading at a forward P of about 17. That's a story for maybe later in the video. But this stock's still stealing money at this point in time. Check this out, okay? I was able to bring my cost basis down to $122 in regards to Meta last year, right? $122. Look at some of these prices people sold me Meta stock at, right? $109, $110, $115, $107. Some Wall Streeter sold me 62 shares at $88.94. $88.94 for Meta. What? Somebody sold me 650 shares at $93.12 for Meta, right? That's what we had going on last year. The greatest companies in the world were being treated like they were the worst companies in the world. And Meta was just an easy money play. Easy money. My gosh, like when you understand and you look at the company and how much they overhired, you knew it was just a matter of time before they start cutting employees and brought down costs exponentially, and that their earnings per share would skyrocket in the back half of 2023, which is exactly what we're going to see play out. And it's just, if you know anything about value in a company, like this was an easy one. And yet Wall Street couldn't see it. They couldn't see it. And they sold the stock at $90, at $80. And it's just like, what for, man? What for? The reason being is because they were so convinced that we'd have a much bigger crash and Meta's going to go down to 70, 60, 50, something like that, right? And completely, obviously, the opposite has happened, and now Meta's trading at 200 something on the way to 300 and 400, okay? Now, in order to speak about this subject, the first thing we got to understand is there's two main things that you need to have happen if you're going to get the stock market to crash, okay? And then we'll talk about Jerome Powell, we'll talk about inflation, we'll talk about a million other things in this video as well. But there's two core things you have to understand, whether you've been in the market 15 years like me or whether you've been in 15 days, okay? What controls if stocks go up and down over time? There's one thing and one thing only that controls over the long term if stock prices go up or down. The Fed, inflation, deflation, all that crap, that's all short-term stuff. The vibes of the market, how I feel about the market, that can shake up the market short-term, debt ceiling stuff. But there's one thing that over the long term drives the stock market, okay? And I hope you know the answer to this, especially if you've been in the market a while. It is earnings. That is the one and only thing that's ever driven the stock market, always will be the thing that drives the stock market up or down over time, okay? So if we look at this, right, as far as 2023, there's estimates of around S&P 500 earnings of about 225 this year, and next year 250. Everybody always wants to know about what's the current year and what's next year projections for S&P 500 earnings, right? Those are the two relevant things because obviously everybody's playing for the future in the stock market, right? So if we go ahead and we do some math on this, right? S&P 500 currently is trading at about 4,100, all right? And, let's say earnings come in at about 250 for the S&P 500 next year in 2024. Well, let's do some math on that. That means we're trading at about a 2024, forward P estimate of about 16.4. That's not the cheapest ever, and that's certainly not the most expensive ever. That's about what you expect to pay on a forward P basis for 2024 numbers, a year out. That's what you expect. 16? That's not high. Once again, it's not super low. There's plenty of times we've been lower than that, but that's not high. Bottom line, okay? For the greatest companies in the world, which is what the S&P 500 represents, to pay 16 times earnings, forward earnings, it's not high at all, okay? So in regards to the earnings issue, you need an absolute crash in earnings, like an epic crash, and we'll speak about that in just a moment. That's very unrealistic, but you need an absolute crash in earnings to get an actual market crash, okay? No, you got to ask yourself what stocks control the market, right? We know what controls stocks over time in terms of how they're valued, but what stocks control the market? There's a few stocks that control the market, okay? This is S&P 500 weighting. And basically, two stocks really dominate the weighting of the S&P 500. It's Apple and Microsoft. They make up roughly 14% of the weighting of the S&P 500. So if Apple's doing great, if Microsoft's doing great as far as stock price goes, it's going to likely pull up the whole market. If they're doing really bad, they're going to pull down the whole market, right? And then if you take the 15 biggest stocks in the S&P 500, right? It's 500 stocks, but let's be honest, 15 stocks are the ones that really matter. They make up roughly 34% of the total weighting. So basically, the biggest big dog companies in the S&P 500 are what controls the whole market, okay? And you could look at the NASDAQ 100, it's the same exact scenario. Actually, the NASDAQ 100 is even more extreme in terms of the weighting to the biggest stocks out there. So in order to get the stock market to crash, you need these companies to have their earnings tank in the second half of this year and into the first half of 2024. Remember, everybody's looking 6 to 12 months in front when it comes to the stock market, right? So what are my opinions on this, okay? Apple, I don't expect their earnings to necessarily tank in the second half of 23 through the first half of 24. I also don't think they're going to be good. And so I gave them a blue, okay? Microsoft will actually have their earnings go up during that time. Certainly not tank. Amazon's going to be up substantially after the cost-cutting measures they've done recently. You're going to actually see their EPS and their net income take off like a rocket ship in the second half of 23 and into 24, okay? Alphabet, as far as Google McDougal goes, I don't know, okay? I would expect there to be slight growth there, but certainly not tank, I can tell you that much. NVIDIA, likely going to actually see their earnings go up in the second half of 23 into the first half of 24. When you understand like what they're getting for their AI chips, oh my gosh, okay? Berkshire Hathaway, I would say that's kind of in the middle. I could see them having earnings go down slightly or up slightly in the second half of 23 through the first half of 24. You have some businesses that are going to do bad, but they also have some businesses that are going to do actually much better during that time period. Meta, are you flipping my flapjacks? Meta's EPS is going to take off like a rocket ship in the back half of this year and through the first half of 2024. It's going to be like night and day difference for that company. I mean, they don't even need major revenue growth right now. They could have revenue go up 5%, 7%, and you're going to watch their net income go to the moon. I can tell you in the back half of this year through the first half of 2024. Complete opposite of tank, right? United Health, I wouldn't be surprised if they're up slightly. Good old Tesla, Tesla. I think that's a wild card. I don't expect their earnings to necessarily tank. I don't also expect their earnings to skyrocket. So I'm kind of in middle ground. ExxonMobil's the one I'm actually fairly confident in. You're going to see their earnings kind of tank here. Doesn't mean they're going to start losing money or anything like that. It's just you're going to see likely in the second half of 23 through the first half of 24, their earnings being down quite a bit. That's my opinion on that, okay? Johnson & Johnson is a little confusing because they're splitting off one of their businesses, so that's kind of like a middle ground. JP Morgan, I wouldn't be surprised if you see their earnings actually accelerate. They just got a sweetheart deal for First Republic. Visa, I mean, just consistently always has their earnings going up, and you never see their earnings pretty much tank. I mean, it's just unrealistic, right? In Procter & Gamble, I wouldn't be surprised if their earnings actually go up in the second half of 23 through the first half of 24. It doesn't tank. So when you look at it from that perspective, like there's one stock I'm confident that their earnings will tank. And outside of that, there's nothing. And many of these stocks are going to see their earnings absolutely skyrocket in the back half of this year going into 2024. So you're not going to have a tank situation here, which means how are you going to get the market to crash if these earnings aren't going to tank, okay? The conclusion from this portion is in order to get the market to crash, you need two things. You need earnings to fall off a cliff, and you need, obviously, the biggest big dog companies like Apple, Microsoft, NVIDIA, Amazon, Meta. You need all those stocks to crash 20 to 50% in order to get a market crash, right? Tough sledding in regards to that, okay? Next up, Jerome Powell. Jerome Powell, right? He is the man that people will blame for, obviously, the market going down, obviously, in 2022, right? In that big crash, because let's call it what it is. He raised rates like a beast. Fastest in terms of the percentage growth, like we've never seen the Fed raise rates that fast ever in history. That was incredible in terms of how fast they were raising on a percentage basis, like nuts, right? Here's the deal. His job is done. This man could go on vacation for the next 3 to 6 months if he wants. His job's done. There's nothing for him to do. He's already raised rates. The Fed funds rate right now 5 to 5.25%. There's absolutely nothing for him to do for the next several months now at this point in time. He can go chill on the beach all summer if he wants. He shouldn't raise rates. He shouldn't drop rates, okay? Now, why is his job done at this point in time? I'll show you exactly why. Now we're at a place where CPI is under the Fed funds rate. Not only that, the trend is obviously down and down and down for CPI. So which means when you have a CPI that's now under Fed funds rate and the trend is clear as day that CPI continues to go down and down and down, there's absolutely no reason for him to raise rates anymore. So that whole fear about, well, if they're going to raise rates to 7, 10%, whatever, it's gone. It's gone. There's no reason for him to do that now at this point in time. And you can say, well, that might be backwards looking data. Let's look forward. Let's look forward, okay? Here you go. This is Truflation numbers. Truflation right now has at 3.49% in regards to the current inflation rate right now. This means essentially what you're going to see next month when the numbers come out, you're going to see a low 4. You might even see a high 3, okay? A low 4 or high 3 is what you're going to see from the government numbers next month. And I would say this entire summer, you're likely going to see CPI either 2 or 3. I feel pretty confident with 3. 2 is maybe a little bit of a stretch. We'll see what happens, but that's what you're going to see this summer, which is, guess what? Going to be right in range for what the Fed's looking for. This does not mean they're going to just cut rates right away unless there's some sort of systemic problem and let's say a bigger financial institution went under or something like that, which is a whole other kind of stretch to kind of get there. But now at this point in time, the Fed needs to do nothing. Absolutely nothing, okay? Jerome Powell can go on summer vacation now at this point in time, okay? Now, next component that matters in a significant way, we've got to talk about the Treasury market. Think about it this way, right? Tons of people selling those stocks, right? Remember, people were selling me Meta at $90 and $80 and all those prices, right? So people are selling and selling and selling and selling and adding all this massive amounts of selling pressure. How do you get the biggest companies in the world to go down 40, 50, 60, 70, 80% like they were doing in 2022? The only way you get there is just insane selling pressure on those stocks. There's just not even enough buyers on the other side that the prices just keep going lower and lower and lower and lower, okay? So think about it like this. Where was all that money going? Well, some of that money could have been going into what is seen as safety stocks, right? Could have been going into, food companies or Walmart stock or Procter & Gamble and Johnson & Johnson, oil and gas stocks, right? And some of those stocks I don't really view as safety stocks, but Wall Street looks at that. So some of those stocks go there, or some of that money goes there, right? Another ton of that money goes into the treasury market because the treasury market's been yielding very good. So a ton of these Wall Streeters, big money, whatnot, put a ton of money, especially in the back half of 2022 and into the beginning of this year, into 1 month, 2 month, 3 month, 6 month, 12-month treasuries, right? Buying all these treasuries because you could get about 5% roughly on your money. And it's basically seen as guaranteed money, right? Which is a beautiful thing. So now, think about it in terms of two ways. One is when that money returns to the market, it's actually going to be more money. If you put $100 million in treasuries, let's say, for example, it's a really big number. Just really want to use a big number to illustrate this, okay? You buy $100 million worth of treasuries and you make 5% on that, you now have $105 million. It's even more money to return to the market, right? But what happens when these treasury bills mature? Fair question. Well, then these individuals that have all these treasury bills are going to say, either I want to roll this into treasury bills again, or I want to go ahead and funnel this money into the stock market, which puts a whole level of buying pressure out there, right? And it really depends on how folks are feeling at that time. If they feel more comfortable with the market and they want to position more into, what they're going to do is as their treasuries mature over this next 1 to 12 months, which there's a massive amount of treasuries maturing over the next 1 to 12 months, is if they feel more comfortable in the market, they're going to return that money to the market. It's going to obviously cause the market to go up quite substantially and a ton of stock price to go up quite substantially because you'll have a back inflow into all these stocks. Because it's like, oh gosh, I sold Apple at 125. That was so stupid. I need to buy back at, 225. Whatever. Like, that's Wall Streeter logic right there, okay? Wall Streeter logic, okay? So this is something that's very important. Its money is going to return to the market at some point in time, and it will be more money than before, right? To add on top of that, savings accounts have been yielding 4 to 5% themselves, not from obviously the big dog banks like JP Morgan and Bank of America and Wells Fargo and those guys, but for all the other ones, you can get consistently pretty much out there 4 to 5%. So when, once again, people feel more comfortable investing back into the market, right, and they get back in, they're going to be bringing substantial amounts of money with them and probably even more money than what they left with because they were able to get 4 or 5% on their money while it was on the sidelines, while it was in hideout time period, okay? This is something that matters in a significant way that is a risk factor to the upside, actually, in the market that's not being considered. It's also a reason that if you do get earnings to go down in the S&P 500 in general for the back half this year, it makes it hard to get the market down in a substantial way because there's so much flipping flapjack and money tied up right now in treasuries and savings accounts that any dips out there, people are going to be ready to buy those. Think about that for a moment, okay? So that matters in a significant way. Now, on my reaction channel, right, I react to Wall Streeters all the time on there, sometimes several times a week, guys that go on CNBC, Bloomberg. And one of the things I love about that channel is I've been able to keep up to date with other folks' opinion more often, right? And what have I, reacted to mostly for the last 6 to 9 months? Most of these Wall Streeters go on there and they're doomsdayers, right? They're short the market, they're defensive, they're cash, they're offsides going into this year. And because they were all convinced that, gosh, everything was going to fall and fall and fall. That's why you got those stocks to fall to those prices that we went through earlier, right? In order to get that, you need Wall Streeters to sell it en masse and be so convinced of a crash, which, we had something happen there, but it wasn't that. And so now these folks are all offsides. Some of them are starting to go a little more neutral, meaning they're not bullish on the market, but they're also maybe not bearish. There's still an extraordinary amount bearish. Look at the AI investor sentiment numbers. I think we're still over 40% of the market is bearish on the market the next 6 months. So we're still extremely bearish on the market as an investor whole out there. And what happens when more and more of these folks go to neutral? And what happens when more and more of the neutrals go to bullish? You know what's going to happen when that happens. And guess what? When they do that, they're going to be bringing more money with them than they had before. This is important, very important, okay? Next up here, remember, folks, we had 2 crashes in a matter of 3 years, okay? We had a 30% drop in the NASDAQ in the Rona crash. We had a 30% plus drop in the NASDAQ in, obviously, 2022, okay? At the peak to trough, I think NASDAQ was down, I want to say 37% or something like that, peak to trough, right? And so that's extraordinary. That's not normal, folks. You don't have just a bunch of years where the Nasdaq's crashing 30 plus percent. That's rare, okay? But everybody's seen that, and I think they've become accustomed to assuming every year now the Nasdaq's going to crash 30%. And I can tell you, when you've had that happen twice in a matter of 3 years, generally speaking, you're not going to have that again for a long time. Could you have another 30% plus crash in the Nasdaq for a third time in less than 5 years? It's possible. But I'm telling you, that doesn't happen. Look at the Nasdaq for the past 40 years. Look at it and tell me when you saw back 30% plus crash in the Nasdaq. You had a scenario in the tech bubble where the Nasdaq fell quite substantially year after year, right? But this is very rare that you ever have a scenario like that. And honestly, in the tech bubble, those companies were a joke. I mean, think about the tech bubble and what those companies were versus our companies today. The Apples, the Microsofts, the Amazons, think about the positioning of those companies. Like, it's night and day. You don't even compare those two time periods. It's totally misguided presentation, in my opinion, by people trying to even compare the tech companies of back then versus tech companies of today. Like, give me a break, okay? Not even in the same realm, right? And so you got to understand, like, to have a third time happen in a matter of 4 or 5 years is very, very rare. So now at this point in time, to get this epic crash, it's tough sledding, folks. And a lot of people are off sides, and they're going to have to position into this market the next 6 to 12 months, which is going to be very, very interesting. I can tell you that, okay? Yeah, it's a fun market, folks. You know, they could have simply, instead of selling out all those stocks, you know what they could have done? They could have hedged a little bit. Buy some short-term puts or something like that. They didn't have to sell off all those stocks 50, 60, 70, 80%, the greatest companies in the world. Are you kidding me? They could have just hedged. People make their own choices out there, folks. A few pieces of housekeeping before we leave here today. One is I just launched the 5-Figure Club inside the Discord Patreon chat, okay? So that is pretty exciting. So if you want to fill out an application in there, then go ahead and check out the Discord chat there. That will be pretty awesome. And if you're looking to join us in there, by the way, and see the moves I'm making in the market, plus get part of that Discord, you can check that out. That'll be probably pinned comment. No, that'll probably be in the description down there because I'm going to put the pinned comment as my Instagram. 6-Figure Workshop. If you want a 6-figure workshop, if you're somebody that makes $100,000 plus a year, and kind of my thoughts on investing in this year and beyond, then send me a DM on Instagram. Say something like 6-Figure Workshop, please. I'll send that over. Just send me a DM. And once again, my Instagram is linked. That will be linked as a pinned comment down there. And also, in the Patreon, we announced the winners for this month for the private stock group. 2 people are drawn every month that can win a membership into the private stock group. And so we announced those 2 names in there here today. Appreciate everybody joining me. Thanks for being subscribed. Much love and have a great day.